G'day YouTube investors, welcome back to Pete's Investing for March 7, 2021. If you've been following the share market across Australia and the US especially, there's been a slight correction, so fingers crossed. Let's see what happened to our popular trades that we're tracking. So again, we're using 15-minute charts to track these particular stocks, random blue chip stocks which pay dividends. A couple of stocks from Australia, the US and from Europe. Firstly, we're not recommending you trade any of these or instruments, rather it's purely an educational guide to some trading ideas. Also, very importantly, don't forget to subscribe and click on the notification button to receive any updates. And if you want same-day updates on any of these instruments, please subscribe to our Patreon channel, which you'll get daily updates as and if they happen. And for an added explanation, please refer to our supporting videos, which show the explanation of the simple trading strategy we use, the average down process, and money management concepts. So let's get stuck into it. So again, we revised the dividend yields from Yahoo Finance, along with the ex-dividend dates of those particular stocks. This shows the profitability over the 18-month period, and that's for the buy and sell strategy we use versus buying and holding onto the stock without trading it. So if you bought the stock, in other words, and just held it, you would have made for Telefonica €361. But if you bought and sold based on our strategy, you would have made €2,377 over the 18 months. And these calculate out roughly over the 18-month period, on average 17 months actually. So about €555 slash Aussie dollars slash US dollars, and we just summarised it all in dollar amounts, just for a ballpark estimate. So let's get stuck into it. First of all, Telefonica. So Telefonica, in the long term, let's look at that. It's gone fairly sideways in the last couple of weeks. You can see there, if it's open up the trade there. So it hasn't done much in terms of movement. So that's where we would have entered the trade. So in the last couple of weeks, it's done pretty much bugger all. So as you can see there, overall, though, the profitability has been positive. We have a bit of a drawdown there during the September, October, November period of last year, but it's recovered nicely, and we're doing quite well versus the buy and hold strategy, which we're in the red. Hence, this one here. Let's look at the Commonwealth Bank of Australia. While waiting for that to load, as you can see here, it's paid a dividend 15th of February, or ex-dividend, payment due shortly. Would have made $827 over the 18-month period, which works out to about $44 a month. And that's trading $2,000 amounts. Each of these trades $2,000 or €2,000 amounts. So what has the CBA done? So again, you can see here the difference between profitability between the buy and sell strategy versus the buy and hold strategy. And over the long term, it's been pretty flat, similar to Telefonica, although it's making a slight recovery from the last few days since the start of March. So it's not too bad. Next, we'll look at the BHP Australia. Let's look at the long-term view first. So you can see there it's continued quite nicely, 1,037 Aussie dollars in profitability, buy and sell versus 321 to buy and hold. Now it's been a bit of a decline in last week's trading on BHP after proceeding flat for a while. Now, in our trading strategy here, you would have noticed we entered the trade here and exited there with a profit, and hasn't re-entered the market yet. So it's coming back. If you follow our simple trading strategy, it needs to break below the CCI 100 moving average 20 before it recovers back and breaks above the minus 50, then above the 0 before it considers an entry. So you can see here we haven't entered BHP yet, so I'll keep an eye on that in the coming days if it retraces back above that CCI 100 0 level. I won't explain the detail in our trading strategy. Please refer to our simple trading strategy video and the average down strategy to get more explanation on that. So no trades open at the moment for BHP. Next we'll look at JPMorgan and Chase. And as you can see here, in terms of the profitability, done 1441 US versus a buy and hold of 513. That works out to about $80 a month, trading $2,000 amounts. Now, long-term view, it's in a bit of an uptrend for the long term, but as you can see here in the last week, couple of weeks, it's actually the last few days, it's gone sideways pretty much. It closed out here at a profit, then it reopened back here, so it's gone sideways, and we're holding about $2,000 worth of stocks or 13 shares in that trade. So it's going sideways at the moment since our opening back here. Volkswagen. This is actually not too bad a trade. It's open and closed in the last couple of weeks with little profits here, and it's reopened it again back here and it's continued upwards. So it's doing quite well, hasn't closed out yet. So that's doing €935 to buy and sell strategy versus the buy and hold strategy at 413. Remembering, the buy and hold strategy performs better because the positions are held and the profits let to run, but that only works if and when the share price continues in an uptrend like this. When it goes sideways or even downwards, such as in these scenarios, you can see here during COVID, it declined, we doubled up on our trades, and when it exited with a profit. Entry it again, exited with a profit. Each of these are profitable trades. Whereas here, during the buy and hold strategy, because you're not exiting, it's just maintaining that negative profitability until at such time that it breaks above the break even of $100,000. Again, refer to our trading strategy for averaging down process in separate videos in the links below. Johnson & Johnson, not doing fantastic in terms of profitability over the 18 months, but it's still better than the buy and hold strategy of $51, which works out about $15 a month. So again, looking at Johnson & Johnson, you can see here it's taken a bit of a dive in the last few days, the last couple of weeks maybe. It's opening our trade back here and it's held on to that. So our profitability is dropping off and not quite as strong as the buy and hold strategy. But we'll follow our strategy and it should recover. Caterpillar. Let's look at the long term. Again, nice uptrend. As you can see here, the buy and hold strategy does quite well, although it doesn't work well during a downtrend. So if and when Caterpillar corrects, our strategy will be in a better position to profit versus the buy and hold strategy. Last few weeks of trade, you can see here it closed out at a profit here. It kept rising, as you can see there, the buy and hold strategy kept adding to it and declined. We weren't in the trade at this point. We entered the trade here, declined, but it's now recovering back to where in more positive territory. So that's looking good at the moment in terms of continuing our trading strategy of buy and sell and averaging down. So that's pretty much it in summary. Over the 18 months, we've made $9,000 on trading $2,000 amounts, which works out to about $500 a month in revenue. Obviously, the more you invest, the higher the revenue and a potential drawdown will be for our strategy. That's it for now. Again, please refer to our other videos for added explanation of the simple trading strategy and the average down and money management concepts. And also don't forget to click the subscribe and notification button and subscribe to the Patreon channel should you need to get daily updates in addition to these weekly updates. Thank you and see you in next week's video.